Here's another daily market analysis for the next day. That's October 18th, Friday, tomorrow. And yeah, let's begin with the charts and see what will happen today. So there's Nifty 50 charts that you see. So there was an indication from the Bollinger Bands that this is expansion that has begun, and then that was happening, which was bearish bias. No confirmation of that, and that's exactly what happened today. Market started sliding down and closed with a big bearish candle, right below the 20 exponential moving average. So the expansion of Bollinger Bands is seen there, and the wide range bearish candle can be seen here. So almost 1%. How much is that? It's 0.89%. That's 222 points lost in a day. Right, so market was consolidating for 7 days almost, and then on the 8th day it had slipped, and then seems like it's trying to get more towards the downside. And look at Banknifty, the same wide range bearish candle. It was under severe resistance and was consolidating for 2 days, not 7 days, and ended up with a wide range bearish candle after hitting resistance below the 20 exponential moving average. Right, so the expansion of the Banknifty's Bollinger Bands on the daily also has started. It indicates that it's likely to retest the 50,150 zone on the Nifty, and today it in fact almost retested, you can say, the previous swing lows, and let's try to figure out the levels on the downside. So the first support would come in at obviously the 24,700, which does not touch that 50 points above. So that could be retested. So there could be some support that can come in because that's a previous support zone. So if that is breached, then it can go down to 24,461, where the 100 exponential moving average is coming in. Right. That's also there is also a Fibonacci 38 retracement there, and it's also a previous resistance zone where a breakout happened from that zone. So 24,461, 24,500 is going to be a very good support if retest fails to find support at 24,700. So once if that also gets breached, then it can fall down to the previous swing lows. It comes in at 23,900. Right, you have the 24,000 also big rounding number that's there. You have the Fibonacci 50 retracement level also there. That's also a previous swing low. So it's come from so many things. So 24,000 is going to be a very good support if the 24,500 also does not sustain. So on the upside, the first resistance will be to have a green close above the exponential moving average of 20 at 25,181. 25,181. Before that, you have the 25,000 big rounding number that has to be cleared. So anything about 25,200 green close could be indicative of an attempt to move further up, until then it's bearish bias consolidation. This consolidation is change into Bollinger Bands expansion with on the downside. That's what. So if the 25,433 previous resistance also is taken out, then it can find 24,850 was a gap resistance is there. Moving on to the Banknifty, it could find support at the 51,750, 745. 51,745 is 100 exponential moving average, and if that is breached, then it can find support only at the Fibonacci 50 and the previous swing lows at 50,200 nearby. So it's going to be a very crucial support. It's the confluence of Fibonacci 50 and the previous swing lows. And if that support is breached, then 200 exponential moving average and Fibonacci 61, very crucial support, will come in at 49 up to 66. Right, this is zone. So a breach of that will be major correction. So market has so far corrected only 8% on Banknifty and 6% only in the Nifty, and the largest correction since very long time, almost since the March of 2020 to the previous major swing lows. The biggest correction is only 10 to 11% on the indices. So long way to go. Corrections, if the market decides to correct, then it can correct to 10 to 15% easily, and anything below above the 20 can be considered as a reversal on the long time frame until then market is just consolidating. 10% or 15% correction is nothing after such a ferocious rally. So those are the levels that we're talking about. Candlesticks are bearish and patterns, we're seeing that. Expansion of the Bollinger Bands also seeing that. Now looking at the momentum has slipped to the sideways is the news of the day. The daily charts of the Nifty is showing that the momentum has slipped into the bearish zones from the sideways. On the short term, Banknifty is, from the momentum perspective, is much better than Nifty because it's still in the sideways and not fallen down to the bearish zones. Make a note of that. Bearishness is reducing in the Banknifty and the Nifty. It is not rising up, but it's in the bear zone. So trend in the short term is bearish. Momentum in the short term has turned bearish on Nifty, and Banknifty remains to be in the sideways. That's about the momentums. India VIX has stayed more or less flat, only 2.5%. 13.38 is where it is. So India VIX is not spiking too much despite the fall. Make note of that. Right. Volatility is less. Probably the market is just was or is waiting for some major event or some news to get triggered for it to further fall down or further make the next big reverses. You never know. So that's what it looks like, because volatility is not much. It's in the low volatility regime itself. If we look at the heavyweight stocks and the sectors that in broader markets, let's try to understand what exactly happened. Broader markets have fallen down after 6-7 days of trying to reverse and move up. Mid cap is 1.6% up down and 1.24% small cap down. So broader markets are also fallen. So it is across the board sell-off that has happened today. The IT sector is the only sector that's seen green 1% up move, right? Infi and TCS also shows green likewise. So apart from that, it's all big setback, and auto was and the reality are the two sectors that has fallen big time. 3.76 in reality and 3.54 in the auto. So auto sector is having some fundamental results, earnings related issues going on as far as I understand. It could be the reason. Auto is correcting itself bigger as compared to the pharma and metal and IT. FMC also is not that doing great today. Also have a solid correction of 1.6 is also like, so 1% in the pharma also has got hit. So across the board sell-off has happened today, especially in the reality and the auto taking a bigger cut. So this is exactly what happened. There is not much green except for the IT, Infosys, and then some non-contributing stocks. Banking sector is all red. There is no green at all. Right. So if you look at the heavyweight stocks that contribute maximum to indices, you can see that Reliance is trying to move up, but feeling selling pressure. It bounced up after the bad results that came in, where market took it to the previous major support zone, and it seems like it was trying to move up. Today it closed flattish. HDFC could not keep up with the momentum, and it's falling back to the sideways. And the Infi and the TCS, which is closed green today, and Nifty is doing really good, heading to new all-time highs. Bank stocks, ICICI Bank and Kodak Bank and HDFC Bank, all of them lost 1% or more. Kodak Bank not 1%, less than 1%, but yeah. IDC is also sliding down. Correction continues. Yes, the FMCG sector also 1.6% correction. So banks are not doing good. Only the IT sector and only IT heavyweights are doing good. US markets are showing some green. Drawdowns, it's not very far from the all-time highs. Although some red candle performed yesterday, today it's the last Drawdowns, Nasdaq and S&P 500 are showing some green. And crude is falling down. War news was spiking it up, so it is falling down. This is good for an important country like ours. And gold is at all-time highs once again. Right, which is a worry. Probably markets maybe investors may be seeing some correction in the market. That's why the money is getting piled up in the gold. Gold is at record highs, and the dollar is above 84. It's really bad. FIs have been selling like anything. 70,000 crores or something is the sell-off that has happened the last 2 weeks alone. And today, look at this, 7,421 crores of rupees selling, and it's only the mutual fund money that is holding the markets. And how far would that happen? We are not sure. They are trying to compensate for this. So FIs selling or money getting shifted to the Chinese market or somewhere consistent this last 2 weeks is what is causing the problem. money is being pulled out from our markets is something of worry or concern. The open interest analysis might be clear there because today we had the weekly expiry on the Nifty. We'll look at that on Monday onwards. So to sum it up, the market view is that it's bearishness, expansion and downside indicates most further downfalls, support resistance on downside, keep note of that. At times, have types of losses and hedge your portfolios. The correction of 6 could extend to 10 or 15 in a matter of 1 or 2 days or a week. You never know. That's how hard the market punish if corrections are not coming in frame as indicative of healthy markets. That's not happened. Very small corrections where the market was heated up to the 26,300 levels in a matter of a few months. So you gotta be cautious and stay hedged and have tight stop losses. Stay cautious, play it safe. That's all I have. Thanks for watching. Happy trading, happy learning. Bye bye.